Oil prices have been sliding slightly, but more importantly, the price at the pump. I have a chart on gasoline unleaded futures here in the United States showing that we're getting real close to seeing that the price of gasoline drop down, get back into a range that's a little more normalized. We've been elevated for some time. What's happening is supplies are beginning to become backlogged. A couple reasons. Most importantly, the economy may be starting to contract a little bit and consumers are not demanding more. Supply is starting to increase. Prices are coming down. This will affect USO stock and XLE stock. Both of these are ETFs that trade off of oil and then the energy sector. Let's jump in. I want to continue talking about this because this is something I follow very heavily because it helps determine what's going on with the economy. Let's look at some charts. If you are just joining me for the first time, thanks so much. Make sure to hit that like and follow down below. Follow the links in the description to my website, dhtayloranalysis.com. I'm an economist and I look at the broader economy to determine what's going to happen in the stock market. I look at all the various elements of the stock market. I don't just look at one thing. No stock lives on an island. Everything is connected. And today what we're looking at, this chart right here, RBOB gasoline futures. And this is a rolling future, and it is tradable, but you're better off trading some of the ETFs that will allow you to get in there. If you look here, this is basically the price at the pump, minus a little bit of cut that the Circle K is getting there. We're seeing this thing drip down further and further. There's some backlog, but there's also some excess supply. I've been hearing about some supply issues in Oklahoma where there is too much supply, and because of that, and Oklahoma of course happens to be one of the biggest areas for oil and gasoline here in the United States, this is pushing price lower. Good news, if you're pumping at the pump, we should be able to get this thing down lower. But there's a couple things at work here. It's not just supply where the refineries are catching up as much as we're also seeing signs that the consumer is consuming slightly less when it comes to this. That's good news. We need the break at the pump, but it all plays into each other. Here is, this is USO stock. It's an ETF that trades off of oil. And as you can see, oil itself is starting to push lower as well. There is a pretty strong correlation between the two with the price of oil, what happens with gasoline. But the next thing with USO is XLE. This is a spider ETF. XLE stock is one of the ones that trades off of the energy sector. There's a pretty strong correlation to the price of energy, oil, gasoline, whatever that energy product may be, the base commodity, and how profitable the energy sector is. So if we continue to see a contraction of the economy, we'll see prices for oil and gasoline drop, and you're going to see revenue, of course, drop lower, plus profits for the entire energy sector. This is one that I like to play often. I'll often sit here and get in on XLE and sell some calls or puts, depending on what's going on. In this case, I've been looking to get heavy into selling calls, let that time just wear out. I expect energy prices to continue to move lower. The economy, because interest rates are higher for longer, we should see unemployment move up somewhat. It's been sticky, real sticky, 3.4, 3.5, 3.6. We're at 3.8 right now for the unemployment rate. Eventually, we'll get up to about 4, 4.5. Because of that, there's going to be excess supply for oil, then of course gasoline, which means XLE stock will continue to be pressured lower because these energy companies are going to have less revenue and less profits. So I'm selling calls on these XLE stock all day long. I've been getting in usually about anywhere from say 1 to 2 weeks out. I'll go ahead and I'll sell those calls and just looking for theta. Let the time just ride out. Maybe I'll see a big move downward in XLE and I'll go ahead and take some profits real quick, wait for it to pop back up, then get back in selling those calls. But for me, The economy is contracting. And the real culprit is this right here, but it's also something that I'm kind of keeping an eye on, because what happens if this drops down? Weird things are going on in the bond market. This is the 10-year Treasury. The 10-year Treasury, of course, is it's the benchmark for the United States. All investments, the first thing anybody who's investing in anything, the very first thing you should ask is, what's going on with the 10-year? It is the benchmark. Then you start looking at the indices, the S&P 500 SPY stock, NASDAQ, QQQ stock, whatever it may be. In this case, we've got 2 big days coming ahead. Wednesday, we get the Federal Reserve. We're expecting nothing out of there, but they may say something at the press conference afterwards. The next event is Friday. Unemployment. What happens if we get a really strong number, a robust number? Employment is a lagging indicator. Last month, we got a really robust number. It's very possible we see a continuation of that. The 10-year would go through the roof. But what if we also see maybe signs that the employment numbers are starting to contract more? That would be a good thing, because the Federal Reserve would sit there and say, we're nailing this soft landing. The stock market would certainly believe that, and it would shoot up. Most likely, the U.S. 10-year yield would drop. And we are looking at the 10-year yield on this right now. So these are kind of the things that I like to play together. I look at everything inclusive, the bond yields, then the stock indices, then the commodities, to ask the question, what's going on with the consumer? How are they going to drive this economy forward? We've got a big week. I'm still short some calls on XLE. I want to wait until I see what happens on Friday before I put any more positions short call options on XLE stock itself, because that one could get interesting if we get another robust employment number. But a lot of what I'm going to be doing over the course of the next month, all through November, is because of what happens on Friday. And it also will drive, say, USO oil, or RBOB, with natural gas, unleaded gasoline, all of the energies. We'll see how that plays out. I'm going to continue to keep this content coming out to you guys. Make sure you hit that like and follow button. And of course, make sure you follow the links, dhtayloranalysis.com. Get the free email newsletter. We'll see you in the next video.